Wealth accumulation versus wealth preservation. Investors often focus their time and energy on the wealth accumulation phase, which essentially means that they invest their monies in different instruments to try to maximize their rate of return. An equally important thing to keep in mind for investors, though, is that there is also wealth preservation stage where you try to control the downside on your assets and ensure that you're able to achieve your end objectives in a sustainable manner. So what really is the difference between these two phases? Typically, you'll find that when investors are younger, they want to keep focusing their energy on trying to get growth in their portfolio through taking some measured risks and hopefully finding that the benefits of compounding and investing long term come to their rescue. Time in the market is a very important part of this phase. In comparison, during the wealth preservation phase, the idea is to be able to withdraw some money gradually to support needs like retirement cash flows, for example. And what you end up doing is focusing your energy on timing that exit from your portfolio in a manner that works most effectively for you. Somewhere between the 40s and 50s, investors reach a point where they get into what is an important inflection point called a wealth crossover, where potentially the income from their investment portfolio can be higher than the income from their profession. However, one needs to keep in mind that when you look at returns over long periods of time, when you exit can have a very important role to play. So for example, for investors who may have been forced to exit during COVID because they reached retirement at that phase, they were probably drawing down from their portfolio initially at a point when markets were down 20 to 30% from their values just a few weeks ago. It is therefore critical for investors to do what is called stress testing on portfolios to see how portfolios can actually behave at different points in time in case an asset that they invested in actually fell in value or some of the assets that they had in their portfolio actually underperformed for long periods of time. And this stress testing will allow them to handle these scenarios in a far more mature manner if they hit upon some of this. It's important to avoid certain pitfalls. Don't be too aggressive during the wealth accumulation phase by concentrating on your assets and ensure that you are diversified across asset classes and across geographies. During the wealth preservation phase, don't become too conservative and forget that you need growth assets in your portfolio to be able to beat inflation, because inflation is not going away anywhere. All in all, the transition from a wealth accumulation phase to a wealth preservation phase is a very, very important parameter to ensure that you have a financially rewarding journey.
Disclaimers. Investments in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BUSL and certification from National Institute of Securities Markets, NISM, in no way guarantee performance of the intermediary or provide any assurance of returns to investors. The information is only for consumption by the client and such material should not be redistributed. The securities quoted are for illustration only and are not recommendatory. This material is for information and educational purposes only.